Craig had a question in the chat. He's asked it about 2 or 3 times, so I don't want to go past it.
Let's definitely get it.
Back on NQ for 1 second. He's curious, do you guys think this could be a fake out day like it was last Monday when we had the 1-day rally?
Craig, I do think that's in the back of all of our minds, quite frankly, right? We've seen these, anybody that's been trading in I'm not even going to say back in the day, I'm just saying in the pandemic, you know those shakeout days can happen. There's no doubt about that. I do believe we're talking about a little bit of a different market today than we were last week, though. I think more people are waking up to the nonsensical arguments that are happening in the bond market. I think that storyline is in it, not in the rear view mirror, but we're passing the wreck, and we're all kind of focused on it right now. But I also think a week after, we've gotten a little bit more time to reflect after Jay Powell's commentary last week as well. I talked about on the podcast yesterday the certain things that the Fed could have done and why they do these Fed policies and all that jazz. So I think we've had a little bit more time to digest the Fed commentary from last week, a little bit more time to let the political process play out with $1.9 trillion stimulus plan. I think we've given it a little bit more time in the cooker to let kind of the market, handle this information that's coming at us. And I look at it technically saying, well, now that we've had a little bit more time to process this information, the market technically is processing this more constructively. And you see that from a technical perspective. So to me, yes, you do have similarities to what we were seeing last week as well. But I think the collective amount of evidence, the circumstantial evidence, if you will, the collection of it does give you a little bit of a different read on the intraday analysis and how this market is processing positive versus negative news. I think there is a not a substantial difference between the starting of this week and last week, but I do think there are key differences that you could have more confidence coming into this week. Let's say, like, for example, Craig, and I think that's just such a wonderful question. Like, for example, looking at last week, here's last week. Here's basic materials. Here's it this week. I'm more positive on basic materials this week than I am last week because you have broken out and have tested that support channel and are recovering. Are you out of this neutrality woodworks? No, but as you see the market go up, as you see it test support, as you see it break resistance, typically we do get a little bit more confident there. When you're looking at energy here this week, yeah, like I said yesterday, I think there's a lot of the triggering impact, short-term triggering has already happened in the energy space. There are still some pretty decent setups there, though, to trigger that could play catch up. But for the most part, I don't think any one of us would be surprised or shocked or upset if we saw energy consolidate for a week and let the moving averages catch up to it. Like, Mark, you're big in energy right now. Would you care if the energy consolidated for a week, high base, and let the 9 EMA catch up to it?
No, it's healthy. It's healthy.
Yeah, that's very constructive, right? And so I actually like energy, even though I think it's going to consolidate for the rest of the week. Maybe it won't, but maybe that's what I want.
Man, you know me. I'm a cash flow trader. Would I mind a consolidation pattern on anything?
No, I think Mark might actually buy his first breakout of his life if he gets it. That's how strong that pattern would be. When you're looking at communications this week, you have that one test last week gets beat back down. I'm sorry, this is more constructive price action coming into the breakout than this price action coming into the breakout. I love communications this week more than I did last week because, again, you've had a week to process all this information. We've had a week to kind of understand what the market is focusing on, and what did comms do? Nothing. And that is such a beautiful thing. that comms didn't get caught up, that it's maintained strength. And so I like that breakout more. You know, we've talked about discretionary, we've talked about technology, staples more constructive this week than last week, utilities still grotesque, but more constructive this week than last week, real estate still grotesque, more constructive this week than last week, healthcare not out of the woodworks, needs to get above the 50-day moving average. But again, when you're looking at healthcare last week here, saying, oh my God, low base, look at the violation that's going to happen this week. It's like, are we going to V-shape breakout and recover back to the highs? You do have a different perspective. Industrials last week were hesitating into a momentum breakout. This week, you got a high base breakout, and it is time to rock and roll in Deere and Caterpillar and everything else. So finance, same conversation as comms and industrials. So my point is, yes, there are similarities, but sometimes those similarities, simply because you get time in the cooker and for the market to process the information, everything becomes more constructive. Even if those storylines don't change, it's simply because the market has had time to process the information, and many participants in the market have been like, you guys are insane. You think this is a story? This is not a story. Others are going to be Chicken Little. We'll see who's right over time. But a week in the cooker to process this information, I can tell you for certainty, guys, that my opinion of this right now is a hell of a lot more different than it was last week when we were going through it in the middle of it.
Mm-hmm. Yeah, mine as well. I think you have to, obviously love the price action. And if tech's not going to rally 4% a day, so let's just make sure we're all clear on that. Doesn't have to, though, as long as it's not selling aggressively. These
if there's
other areas,
another disclaimer in the halftime report, I'm punching a wall the rest of the day. Like, come on.
And going back to the NASDAQ.
Disclaimers assume people aren't very intelligent. That's what disclaimers assume.
Emily, go ahead.
NASDAQ real quick, specifically on the NASDAQ, because I think that was the question about, is it a fake out? We've identified clear support zones intraday. So if it is a fake out, you have those support levels for you to, to adjust your positions appropriately. I mean, there isn't really that much to it. Look at those intraday, charts and find your resistance levels, find your support levels. If you decide to take a bite out of tech, do so knowing that you have those clearly identified support levels in the NASDAQ.